Hi friends, last time we have seen about GST and we have also seen what CGST is and what ESGST is. Now today we will see how actually this tax is paid on the different stages. Suppose manufacturer of a watch has sold one watch for rupees 200 and he sold this watch to the wholesaler, and further this wholesaler sold this watch for rupees 300 to the retailer, and retailer sold it to the customer for rupees 400. Rate of GST charged at every stage is 12%. Then how each trader pays GST and takes his input tax credit, that is ITC, at every stage of transaction. This is shown in this flow chart. You see here, this is manufacturer, and manufacturer has paid rupees 24 here, and he in return, while selling it to the wholesaler, took 12% from wholesaler. See, 12% of 200 is 24, and this wholesaler, while selling it to the retailer, sold it at 300 rupees, and 12% of 300 is 36. He took it from wholesaler. Then wholesaler sold it to retailer. Retailer sold it to customer for rupees 400 and charged for 12% of 400, that is 48 rupees as a GST. This is the flow chart in which the trading, that is paying the taxes at each stage, is shown. Some new terms we are going to see, that we have seen here ITC, that is input tax credit. Now in detail we will see what is input tax credit. GST is levied and collected at every stage of trading from manufacturer to consumer. When traders pays GST at the time of purchase, it is called input tax, and he collects GST at the time of sale, which is called output tax. At the time of paying GST to the government, a trader deducts the input tax from the output tax and pays remaining tax. This deduction of input tax is called as input tax credit, that is ITC. Now what is GST payable then? Output tax minus this ITC. In short, while paying taxes to the government, each trader in the trading chain subtracts the tax paid at the time of purchase from the tax collected at the time of sale and pays the remaining tax. For this, we will see one solved example, then you will get the idea clear. Here example is given. Mr. Rohit is a retailer. He paid GST of rupees 6500 at the time of purchase. He collected GST of rupees 8000 at the time of sale. Find his input tax and output tax, and what is the his input tax credit. Also find his payable GST. Hence find the payable CGST and payable SGST. Now see in this example, Mr. Rohit, he is an retailer. He paid GST of rupees 6500. Now Mr. Rohit's payable GST means the GST to be paid to the government by Mr. Rohit. Here output tax, that is tax collected at the time of sale, he has collected tax rupees 8000, and input tax, that is tax paid at the time of purchase, is rupees 6500. So ITC will be rupees 6500. From that we can find the GST payable, which is output tax minus ITC. 8,000 minus 6,500, that is 1,500 will be the GST payable, and GST payable is payable, see GST is whatever GST is there divided by 2, that is 1500 divided by 2, that is 750, and payable, yes, GST is also 750. Hope you have understood this. Along with this, you just solve practice set 4.2 as an homework.